All right, welcome everybody. This is, I don't know what the overall trend is going to do in the next couple days, but here is our 60-minute SPY system and the SPXL, which we were promoting in a live trading room, and also J-Person Asset Management. We exited. We're flat. First off, this morning or this afternoon, the SPXL covered on a compression stop, liquidated a long position. I'll share that trade with you in just a second here. We'll zoom that up. This is the SPXL model. We use this both for J-Person Asset Management, and this is what's promoted and shown in our live trading room. So we had a long position, and obviously it didn't do a whole lot until today, but took a nice little stop out on the compression there on that particular trade. So the question begs, this is a leveraged ETF on the S&P 500. My volume indicator shows, this has been a very weak volume rally. There's just no doubt about it. But the advanced decline, the breadth of the market was very strong. This is the main product. This is the SPY. So the SPY2 as well, it also, about the same time, exited, but it got out on a compression stop slightly later today. So it just kind of trailed its trailing stop function is a slight different model. They're two different. They're based on the same product, S&P 500, but they're two different instruments. So that's partly as to why we have those models. So the long and the short of it is, for those that like to trade leveraged ETF on the S&P 500, they use the SPXL. For those that like to just trade the SPY, there it is. We have these two models up in the live trading room every day. Now, the rally here, I'm kind of happy it did get out because, yeah, that's a little long in the tooth. We did get a little breakout here. It's a little long in the tooth in the this upside movement. The last couple days or last week, we had a little divergence in the market, and the market went short. It gets out. So this is kind of an active trend model for us, and based on the Algo 17 criterias that are set up based on all of my work between the last conditional change, PPS, and again, the person's pivot analysis. So what we had in the room is a couple people were talking today or yesterday in the live trading room, and I was telling them, listen, this is a sideways channel in the volatility, and it as the S&Ps and the Qs have made or raced to newer highs in the month of May, or taking out May's high, the volatility, the VXX, did not, and it had a compression sideways range. Now, this is exactly what we talked up in the live trading room. The other day we had a short. It lost about 20 cents. It got stopped out. It went short again yesterday, which we told everyone, be short on this breakdown, because on a sideways trading range, you can expect a bigger move. And, you know, ironically, in front of our entire trading room, the position covered darn close within 3 ticks of the low of the day. It was just the profit target that it had determined, and it's done that several times. So I tend to respect when the volatility gets out of its profit. Now here's a situation where it got out with a profit, but then it got right back in because why? The criteria about being short was still involved. In this case, we'll see where we are tomorrow. Volume here on the VXX on this downside breakout, it just started to dry up at the end of the day. So I don't know if it's because of the market feeling nervous on the unemployment report, but let me take a look at a couple other items with you real quick. Our newsletter. Let's see, where do we have the newsletter? Let's bring that up into speed. This is the weekly advisory service, and what we did this week, we have a few new positions, which we picked up a half position in Discover Financial, and that trade is doing phenomenal. We tried to buy Dell Computers. We were in it last week. We liquidated. Seagate, Checkpoint Software, we're trying to scale into those. We're already in, and I'll show you our entire portfolio of what we're in and how we're trading it. But you can take a time to read through this of our add-on. This week, our option strategy was to buy the 143 strike call at or near 330, which we did first thing Monday morning. And now what I wanted to do, since I write this newsletter on the weekend, I don't know from the time it gets to our client's email box Sunday to Monday morning if some black swan event occurs. If you find that the market's going to open up in the indexes of 1 or 2% lower, obviously you don't want to place this trade. We opened up marginally lower, unchanged, which was a really nice thing. We were able to get or better, filled at 318. Today, if you follow Twitter, you know that we took off half the position, and it's done pretty well. Our other current positions right now, and here, this is what I was sharing with you. We did exit and took a nice profit in the stock in Dell, and then we got out of a bull call spread in Dell last week on good earnings. We have a long-term September 2026 bull call spread in MGM, and that's working out well. Call spread in Walgreens. This Twitter, listen, we had this trade for a while. I'm not a fan of Twitter anymore. On today's rally, I sent an email alert out, and we liquidated this particular strategy. I'm not going to get into the reasons why, but it was more just, you know, political, and with that whole stigma with Jack Dorsey, I'm not sure where they go from here. I think, listen, let's just get rid of it. We move on. We make another money elsewhere. Kohl's. Now, this was an interesting trade, and I've talked about this a long time. It was a 20-strike call. We paid $5.20, and you guys would go like, that's ridiculous. No. When we bought this, Kohl's was trading around 15, 16, and for 2 years out, 2 years out, we could get into this trade for $5, and that means the stock would need to get to $25 just to break even in 2 years. It was at $25 in March. So to me, in our trading community, a lot of people said this is pretty good. I believe Kohl's the option today, and I'll go through that in a minute. It was up near $9 on that strike, so nearly 100% gain on Kohl's. So the bottom line is today's tape: National Beverage, Exxon, Kraft Heinz, Bristol Myers. We have an electric company. And these are what I'm going to add on to the long-term positions. That's what the newsletter was saying up here. I will add to these longer-term positions. We're only in 2/3 position on AEP at 85.40. We're in 2/3 position of AT&T at 29.75. We're in 2/3 position of Walgreens at 45. Each one of these long-term positions pay a hefty dividend. So we're scaling in. We bought some, and when the market starts to prove itself and break out, we'll add to the trade to be in a full position. So if we're going to buy 1,000 shares, so for example, you're in 666, and we'll add 334 at when the time comes on the breakout, as it says there. That's how we've been trading the market. And today's tape did pretty well for most of the positions that we have on. And this, again, is the main trading room page. And what I wanted to share with you is simply this. First off, we've got this green dash line. Let's go to a daily chart, and now I'll share. This makes sense a little bit better. You can see on a daily chart, this was an area of old resistance. These are last conditional change bars. What is the last conditional change? It was written in my very first and second book, which the second edition will be coming out probably sometime this year. The last conditional change acts as a resistance until violated. Now, between this green dash line right here at around, let's call it 31.84, and this green dash line here around 31.21, this is a very significant resistance spot for the market in the near term, and that's where we're at right now. So I'm glad we did get some profits off of the long positions that we have from our algo optimizer on the 60-minute model. That was pretty cool stuff. Now, usually if the market is going to top out, it tops out and it takes a couple days. And it just doesn't, not very often do you see a breakout of this magnitude with decent volume, and that's what this illustrates. This is on balance volume. On balance volume broke out, the trend is up, it made a new high. There was strong volume in the last 4 days, 5 days on this rally. That's the thing I wanted to share with you. When you get a divergence, a market makes a new high, but volume doesn't, there's no corresponding volume to confirm that. El no bueno, no good. But this particular rally looks pretty good, but we're in an area of significant resistance. Tops take a little bit longer to form. They tend to go up, they come down, they chop around, up and down a little bit before they roll over. But I think at this point in time, using a 60-minute model that says get out, you just follow the model and we got out, all right? So that's that. Next, what did we do with the IWM? Now, why did we pick IWM? You may want to ask that question. Out of all the options, and newsletter was still bullish and said, we want to go with long positions. Why was it a position in the Russell? My longer term work suggested both in the advanced decline, cumulative average, as well as the volume settings. This weekend, my work suggested, and here is a chart with the advanced decline. The moving averages is yellow line, and the blue line were pointing higher. And to me, coming into this week, I said that at the very least we should test the prior week's high, and that would give us more bang for our buck. And today's move did just that. Look, the Russell was up 2.31% today, and the Spider only up 1.33, and the Q's up 0.37. So this was the shot that we had to take, and we did it. So that was why in the newsletter we went with the June 19th 143 strike calls. We bailed on half the position today. Main reason, we're at resistance. So it was a nice trade, and that's all it is, a trade. It's not like I'm investing for my long-term retirement here. This was a trade, an option with an expiration of June 19th. The Russell could go to 170. I don't know where it's going to end the rest of this year, but I can tell you this: by June 19th, I don't know where that's going to be. It could stall, and theta will just erode the premium out. So my best trading strategy is when we get a big move to take half the position off and then monitor the trade. So if we do go up further, then guess what? We still have upside. Remember, if you buy an option for $3, for example, and you get out near 5, what's 5 points plus 143 the strike? 148. So right now, today, we got paid for the market to be at 148 at expiration. So if the market's at 148, I'm getting the same money, just I had to sit through this with more time. So that's one of the strategies or the reasonality of why I do a half out on an exit using options on momentum trades. And this was a momentum breakout trade. Now, the last time I gave option classes, or should I say the first time I traded options back in 1986, we were trading bond options, and there was huge momentum flows. Bond interest rates were going down, bonds were going up. Ron Reagan year, and that was just the wild, wild west of option trading, to be honest with you. And this is not the same type of market. There's too much competition out there, and we're not getting the types of moves here in the indices that we did in the bonds in those days, especially in the future. So again, scaling out still works for me. And that's what I do with options. All in with options, I get all in. When I'm looking for the profit, I take off half. So I just wanted to explain that to you guys and the reasonality of why did we select the Russell of all weeks. Why did we select the Russell? That was the main reason, was that work right there I just shared with you. So Discover Financial, one of the top performing on the board. That was a stock that we picked up from our scans. And I'll share with you briefly one last time using the scans. Where did we pick up Discover Financial? If you look over here, you see this candle's orange. That's a high close doji. So let's go over to the newsletter, and we'll open that up for you one more time. And you'll see right here on this list all of the weekly buy signals and high close dojis. ADP, Baxter, BG, Bungie, that is, Budweiser, City, Checkpoint Software, and that's why we went with Checkpoint Software, Discover Financial, and there it is. Because we were looking at our scans, running these scans, and there is what we came to the conclusion that this is a market. Now, I could have gone with Citibank, and we talked about that, but we went with Discover instead. Kind of happy we did. UPS, literally almost every single stock in this group all had amazing weeks so far. So that's a pretty decent thing to say. Kohl's, look, we've got some of the top performing stocks in this board, and it's no mystery. If you guys are using TradeStation and you have the TradeStation package, we use the Person's Market Catcher. If you're using Thinkorswim, you have access to the Person's Market Catcher. Genesis, as well as new company HGSI, which helps me run scans. It's amazing stuff. This is going to be the most amazing stock picking trade environment, I believe, in 2020. And we're going to want to be able to pinpoint the right stocks, the right sectors. And that's one of the best tools to help us do that, is that relative strength indicator. So between that and volume, I think we've had a wonderful start to this year. It's been a big year for us so far here at Person's Planet, both in J Person Asset Management, outperforming and making, close to over 10% no drawdown in this market environment. Is in managed fund world not bad. It's a great start. And again, as the live trade room, sharing with everyone our strategies. If you haven't taken a test drive of us over here, you may want to, but you got to put up with me. Thanks for listening, and I hope that you found some value out of today's video, especially combining how we select certain stock trades and how we take advantage of those. Thanks for listening. Have a great rest of your week.